Optimism in global financial markets is generated from hopes that recession fears are exaggerated and it could be avoided, at least in the US. Despite the Fed's intention to pursue aggressive monetary policy, the US economy is able to meet the challenge and continue its recovery. This scenario was suggested by President of the Federal Reserve Bank of New York, John Williams, whose comments were welcomed by global investors. Positive news from China reinforced optimism among investors. On the back of zero new COVID cases, Beijing is ready to ease restrictions. The decision sets the stage for global economic growth. The situation will hardly be mirrored in the economic data for June. Nevertheless, investors are inspired. Tomorrow, the market is anticipating China's manufacturing PMI. Analysts suppose that the reading for June will rebound above the threshold level of 50 points, separating expansion from contraction. Such positive news will be bullish for the Australian dollar, the currency of the major commodity supplier to China's industry. In the European session on Thursday, investors will receive fresh evidence that the UK economy is still able to deal with the inflationary pressure. Market participants are alert to the revised British GDP for the first quarter. The third estimate is expected to confirm that the UK national output increased by 8.7% in annual terms. Indeed, the service sector has been expanding. Besides, consumer activity has been going up and businesses have been ramping up production rates. Such benign economic conditions will assure the Bank of England to stick to the strategy of further rate hikes. The pound sterling will gain ground in response. Apart from a weekly update on US unemployment claims released on Thursdays, don't miss a report on US personal spending for May. Importantly, consumer activity accounts for more than 2/3 of the US GDP. No wonder such data is of crucial importance for investors. The forecast is pessimistic. Personal spending is expected to ease its growth to 0.4%. That would be the worst dynamic in the last 4 months. Nevertheless, consumer spending has still been expanding. It's not clear how the market will respond to the data. Anyway, market quotes are likely to make corrections. On Friday, the inflation issue will again resurface among market participants. The European Union is due to unveil a preliminary CPI in 19 countries of the Eurozone for June. Consumer prices are expected to accelerate the annual rate to 8.4% in the first summer month. The figure is almost 4 times as high as the target level set by the ECB as favorable to encourage decent economic development. Earlier, ECB President Christine Lagarde dropped a hint that the regulator is ready to venture into the first rate hike. Bearing in mind her statement and evidence of further inflation acceleration, traders will find an excuse to buy the euro in anticipation of monetary tightening. During the late New York trade, a report from the Institute for Supply Management could raise doubts about resilience of the US economy and remind investors of a looming recession. The manufacturing PMI signals that business activity in the US manufacturing sector might be ebbing away. The ISM index could have declined to 54.9 in June. To sum up, this trading week is likely to close with a risk-aversion sentiment that will trigger sell-offs in the US stock market. Follow actual developments in financial markets in our daily video reviews. Subscribe to InstaForex TV channel and be aware of all relevant news.